Rightio guys, how you doing? It is Mindset here, and I just wanted to take a quick video and show you a 5-minute scalp that could have been taken just based on some principles that we've known, we've learned, and we've studied over the last couple of months. So look, thanks for your time and taking a bit of a look at the video, and let's get on with it. So we'll start with the naked chart on the daily, and we know we've had our relationship from the all-time high down to the swing low, and then back up to this area here, which is the 618 of the overall move. Now we've had some rejection, and that's cool. It is what it is. And we trade the chart and we see what comes our way and we make what we can from it. So on the last video, to move on, you would have seen that we applied some high time frame and key time frames to our chart based on the daily, the weekly, and the monthly levels. So what I'm going to do is unhide all of those items because I've previously done them, and it doesn't make sense to look at them or mark them up as it's a short video. So here we go. We've got our weekly level, we have our monthly level, we have a daily, another daily, a weekly, daily, monthly, and weekly. They're all key levels of support, they're all key levels of resistance. Whichever way you want to look at them, they will certainly come into effect as you take your trades and you trade the market. So as we delve in, you can also see there's an additional item which I've called, which is a PDL. So it's a previous day low. In this case, we've marked it up just for reference, but if you were to, it helps in a bearish sense to aim for a target, and obviously a higher wick if we're bullish aims for a separate zone altogether, but they both can work too. Now, as we delve into the 1 hour chart, what I think we should take a look at is our fibs. So let's just do a high time frame fib. And I want to pull it from the overall move up at this level down. So we will pull it from the swing high to the swing low. And what we should do is we just use a mini extension. And you can start to see that price is respecting these levels quite well. Once we come down from the swing high, we're hitting the swing low, and then we're respecting the levels as we go up. So we've basically hit the 618 as we like to see. And now we're seeing some rejection, a bounce, which funnily enough also can be shown and drawn as a relation to a 618 of this move. And now we're seeing some action that's occurring in that zone. So what we want to do now is we keep these high time frame Fibonacci levels on, we keep our dailies on and our monthlies and weeklies, and then we can jump one step further. So now we're in the 5-minute zone, and on previous videos, I can say that there's a lot of lines that can start to creep on your chart once you start to mark these levels up. So if you find that you're having those issues, hit this this button down here, which is the object tree, and you will see that there are some items that you can start to close in terms of monthlies, weeklies, and dailies. So don't be shy, jump in there and have a good look. Now, if we have a look at this level here, you can see that we're actually ranging in this current price action. So what we're going to do in this respect is look for a short setup, because we know the overall direction and bias is bearish. So why don't we go ahead and pull some fibs from a level that we can reference. So the reason I'm pulling these fibs from this swing high to the swing low is basically we've seen a sharp fall in price, which is a long squeeze, right? Now price has jumped back up, and if you check this level here, I'm just going to show something to you again. Pull from the swing low to the swing high, look where price trades. It goes to the 618 and 786. So the relationship is all around us with this fibs. Now, as we jump back up, you're going to see again, price also starts to trade well and truly within or near that 618 level. And then it replicates again and again. Now, once we've crossed this zone here, you can essentially call that a trend change. But the thing is that price then took a tumble back down and hasn't really recovered to come back up. Now, we've put in a new swing low in reference to this swing low, so that tells me that price rises up sharply, and I'm not sure if we have the volume on the weekend to prove to us that we're going to be bullish again. So in this case, until this level here is broken, we should remain bearish. Now, like we said, so we want to change these fibs here to basically our levels that we like to play with, which we've explored on my threads that I've shared. You can check that out on the Telegram channel, and we'll get them on YouTube as well soon enough. But you can see that price, when pulled from the swing high to the swing low, actually shows the 705 level being hit, and you could essentially take a trade based on this to the 0 level. So had you actually taken a shot there, you can see that price basically came down from this Fibonacci level, which is the 0.5, I do believe, or 382, sorry, and price returned back up into our area of interest and then got sent down. So not only did it hover around this price, but you'll notice that this daily level here, which is key, is confluence to show that there is a support level there, as we've demonstrated. And that's the highlight of why we actually put these levels up and mark them on our chart. Now, what we've basically got here now is you could have a 2.18 R trade had you taken this shot. It's okay if you didn't, and you actually would have, if you investigate this, you actually would have had a secondary shot, which you can see price rallies back up, and you could have actually had a second bite of this. So great if you could have done something like this and taken two shots at the, or two bites of the cherry, but if you didn't, that's cool. I mean, these trades are here every day of the week, every day of the year. You've got this price coming down, jumping back up into this area, which also can be demonstrated as a relationship through Fibonacci. So you can take shots whenever you need. So don't stress, don't run around like a headless chook, and just keep trading, keep studying, and have a crack. The worst thing you can do is not have a go. You can do paper trades. You can just put a spreadsheet together that capture the trades you're doing. Whatever you want to use, however you want to do it, just put the hours in and have a go. All right, guys, this is a quick, short, sweet one. So take care. Thanks for coming, and we will chat soon.